First off, my name is Lynn Cook. I'm the SVP of Sales and Marketing here at Lender Price. I want to introduce you all to my colleagues here. Jessica Garth, she's a business analyst over at Mountain West Financial. And Rania is our Senior Vice President of Client Services here at Lender Price. Do you guys want to say hi to everyone?
Hello.
Hi, everyone.
All right, terrific. So today as our title suggests, we're going to talk about some real world results from utilizing a point of sale solution. Obviously, Jessica, she is actually a client of ours using one of our platforms. And Rania, heading up our client services, she has a lot of experience with implementations with other clients. And the goal today is we're not talking about Lender Price, okay? The goal today, we're talking about this concept of the digital point of sale system. And we want to share with you some real world experience in terms of what one of our clients, obviously Jessica, has experienced implementing a point of sale solution and what we've experienced with other implementations. And this is really just insight, for you, whether you're a lender or a bank or even a mortgage broker, and also for vendors, right? We're just sharing information, and we're hoping that this does encourage some amount of discussion and debate amongst yourselves, okay? So to start with, we're very pleased to have Jessica Garth join us. She is a client of ours at Mountain West Financial. Jessica, why don't you introduce your company to everyone a little bit, give a little background?
Yeah, absolutely. So Mountain West Financial was founded obviously in 1990. So they've been in the business for about 30 years. We do business in various channels. We have retail, we do direct, we have our wholesale, we do our correspondent channel, and we even broker out. With Mountain West, it's a family-owned company. So that's what we have. We have a very family culture, but they're also a community lender. So community lending is very important, and one of the number one priorities for Mountain West, that we emphasize is customer service. Our customers are the most important, and not just a customer like a borrower coming in to get a loan from us, but customers as far as our employees, those that we work with, management and their employees, as well as our broker partners and our vendor partners as well. So.
Terrific. Yeah, and I personally have known Mountain West for quite a while. And there are quite a few lenders such as Mountain West out there, right, that have a very sort of friendly hometown kind of feel, but also have available to them some pretty advanced technology. And so what we're going to first talk about is we do want to talk about what Jessica's experience was in terms of selecting and utilizing a point of sale solution, which again was provided by us, but in a more general sense. So Jessica, tell us a little bit what your initial intent, as you were going into saying, hey, we need a better sort of point of sale experience. What was Mountain West's intent in implementing a new point of sale solution?
So for Mountain West, as many know, with the Rocket Mortgage, they came out, they're talking about you can have loan approvals in as fast as 8 minutes. A borrower goes in and puts in this information, get DU approvals. So for us, we wanted to start heading in that direction with with technology, with a POS system. We wanted a borrower to be able to put in, just enough information that we need to run their credit, get their verification of employment, verification of assets, and then also to be able to run pricing or get some type of pricing and then get a DU. It wouldn't be an official approval, but it'd be that preliminary approval. So that's definitely the initial stage, and then we even wanted to work it up to where the borrower, at the end of it, we have this full application. Documents generate right away. They can sign their 1003 and sign their initial LE, and that's it. We got the ball rolling.
And that's
hit the ground
great. I mean,
running.
I think that's, a lot of lenders, and certainly in my experience, I've talked to a lot of lenders that had a similar type of goal, right? I think it was easy for people to say, hey, once Rocket Mortgage came out, they said, wow, this is an amazing sort of, transformation of the process. And, think about, how many borrowers we could get through the process much faster. Think about how grateful, right, or impressed that borrowers would be that they had these capabilities. And I think in general, the notion was that you could generate a borrower online and get them approved or pre-approved, whatever the definition is, but get them approved in 8 to 10 minutes, right? Um, so let's think about that though, right? I mean, I think those were really just assumptions that people made. Don't you think? I mean, Rania, you've seen it before, right? I mean, how much truth is there to having this actual Rocket Mortgage experience actually work for borrowers?
Yeah, I would say there's a pretty slim to none, right? Going through the entire application, getting all of the verifications, and getting a pre-approval. It works in very few cases, right? It could be because the borrower's income is too complex, right? They're self-employed or they own properties. You can't really expect borrowers to get the data into a format that's going to work in DU, right? Associating the liabilities to the properties, things like that. So sometimes the DU run doesn't work based on what type of borrower you have. A lot of times borrowers don't want to do the online verifications, either because they don't trust it or because, quite frankly, they don't want to take the time to do it, right? They have to go through multi-factor authentication with their banks in order to access it a lot of times. So it really doesn't happen very often.
Okay. So, I think, yes, I think maybe there was some missed expectations, maybe overzealousness, in terms of, can loan approvals be done online, right? And unassisted, in 8 to 10 minutes. I mean, Jessica, give us some feedback from your standpoint, as someone that was attempting to kind of implement that process, right? I mean, what were some of the barriers that you saw? I mean, you had the vision, right?
Hmm.
What were some of
Right.
the barriers that you saw in actually trying to, realize that vision?
Um, so to Rania's point, she mentioned about certain criteria when running DU. And not just that, but as well with the two-factor authentication. For anyone who is doing any type of digital verification right now, there is times where a borrower is trying to access their bank statements through the verification, and then they get in this endless loop of, contact your bank. They contact their bank, and then they go back, and it's still not working. And we've even had borrowers, reach out to, whoever that verification company is that we're doing business with, and they'll say, try this, try that, and it becomes a lot of work for the borrower, and it actually frustrates them. The other thing that we had ran into with the verification of employment is the if the employer is not on the work number, it's not going to work. So the borrower will go through it, and then they get an error, and then they have no idea what to do next. Um, and also, with the property, sometimes you have to, indicate the property a certain way, and within your LOS, you have to indicate it a certain way so that DU picks it up correctly, and when that doesn't happen, for instance, you have to like associate an REO to the liability so DU picks it up correctly. Our borrowers don't know how to do that through this consumer portal, so just getting to the point of running DU was more, it was taking more of a thought process. So it was not something that we implemented right away. And that was just little things that we noticed right off the bat. I mean, then we had to get into, our actual LOS and what our LOS was capable of doing, in terms of pricing and what we wanted to do as far as pricing. Because, with pricing, some of our loan officers, it's a very sensitive topic. And then for others, it's like, oh, I don't mind. So working with the LOS and the integration as well, there was many moving parts that we didn't realize until we actually got in there, and then we were trying to make this vision, come true, and it wasn't just the little things that we kept running into. And we're like, oh, what about this? What about that? And it was, we fixed one thing, and then three more problems would jump out at us.
Yeah, I mean, I think there has to be an understanding between the vendors and the lenders that you know the more complicated you make the process, right? The greater the likelihood that something unexpected may occur, right? Some sort of unintended consequence. And at the end of the day, we may be thinking about how cool these tools are and how they may lift productivity and quote unquote provide some sort of miraculous or joyous experience to the borrower. It seems like a lot of what's being presented in these digital point of sale solutions are skewed more towards the lender versus the borrower, right? How much time are we really spending as lenders and vendors on understanding what the borrower actually wants? Rania, what do you think about that?
Yeah, I think that everybody in the back of their mind is thinking about the borrower experience, but I think from a lending perspective, everybody wants their process to be more efficient and they want to cut costs, right? A lot of times they end up pushing all of the work that they were doing internally to their borrower in the portal and just making the application that much longer for the borrower to complete, right?
Yes. I mean, I think that's a little bit. I mean, Jessica, do you think that maybe lenders and vendors are a little bit too enamored, with these tools and what the potential of these tools are, and not really spending enough time focusing on what the actual borrower wants?
Um, I mean, I could see your argument, but on one hand, a lender has to look at, the borrower experience from many different angles. Yeah, we're asking the borrower to complete their verification of employment, and we're asking the borrower to complete their verification of assets. But the lender already has to ask them to get those documentations anyways, or the lender already has to contact the employment, to verify employment. So it's, lenders have to look at, okay, if I implement this, it's going to take the borrower X amount of time. And then if we do this, it's going to take X amount of time. And then, you factor in, okay, what if something goes wrong, and the borrower gets frustrated. I think the technology of everything is so new, we don't have a full grasp of what the benefits truly are for the borrower, if that makes sense.
Yeah, I think that makes total sense, right? I mean, yes, I mean these are entirely new sort of tools that are being employed, and we obviously run a risk, right, when
Right.
we allow these tools to be let out in the wild, right? I mean, it's one thing to utilize these tools within our own confines, right, with our employees, right, as processors or underwriters. I mean, it's a more controllable environment. If something goes wrong, people may know what to do, but what impact does that have on the borrower, right? I think the
Right.
other thing that's interesting is, from a verification standpoint, I think people have really debated, especially the verification of assets, right?
Mhm.
How comfortable, our borrowers, sharing this private information. I mean, Jessica, did you see that borrowers are feeling very guarded, like even wanting to give this information to complete a verification of asset process, or are they getting more comfortable with that concept?
Um, what we have done for Mountain West, we have explained to our borrowers that we are not housing their information. The information is not even going through us. They are being, taken to a third party portal where they are putting in this information. So we don't have their bank account, information, their logins or anything. And that's, we try to explain that through our digital application, as they're going through. We try to explain that so that way they are more likely to enter that information. For Mountain West, we do have a very high rate of fast forward users. But on one hand, a large part of that is due to our loan officers who are having that conversation with their borrowers. They're explaining that to their borrowers. So the borrowers are comfortable. Like, we do see a high adoption rate, but it's through that relationship that we're seeing. As far as other borrowers just going in, like a just a like a cold call, just coming in, just going into our loan. They've never talked to a loan officer and they're running their verifications. I mean, we can't really give numbers for that. I mean, some of them do it and some of them don't. And I think that just goes to what demographics are okay with it and which ones aren't. Again, it's the technology of all of this is still very new, so I don't think that lenders really know the true number, the true percent of a certain demographic that is likely to just go in and do it without communicating with a loan officer.
Hmm. Yeah, I think, yeah, that makes sense. But you are saying that, look, I mean, if you want to kind of assure yourself of a higher sort of, success rate on things like a digital verification, that, an initial engagement with a loan officer that can, explain this to the borrower, or some type of, a disclaimer within the point of sale process that clearly indicates that, for example, this is not, any sort of information that's going to be captured and saved by you as a lender. It's going through a
Right.
trusted third party, something along those lines, where it provides the borrower with reassurance. Yeah, that makes sense. I mean, Rania, are you seeing the same thing?
Yeah, absolutely. I think that the relationship is key, just like Jessica said, right? Borrowers don't typically want to go to a random website and enter all of their personal information, right? Especially their banking information. I definitely wouldn't. So I think that the relationship is key. And, actually what we're seeing is a lot of lenders are taking out the digital verifications from their online application. They have it as a standalone verification service that they could send to the borrower after the application is done and once the relationship is established, but it's not part of the initial application for a lot of companies.
Okay, that makes sense. Okay. And one last thing, in regards to verifications, although, people don't consider the credit report itself, right? I mean, this is an age-old sort of, verification, right? That's been used for many years. But what issues are you seeing, Jessica, in terms of, providing the credit report pulling capability, within that digital point of sale?
Right. So again, within our application portal, we definitely explain to the borrower why we need to obtain credit. We do give them the option to run their credit during the loan application process, or if they would rather wait until they've spoken to a loan officer. And some run the credit and some don't. But for those that are running the credit, the biggest hurdle that we have been experiencing are trigger leads. That is the biggest. We are having borrowers bombarded by other lenders, within an hour or two of an application, just because of that trigger lead and that information getting sold. And so some of our borrowers, if they've already some of our loan officers will, have this borrower and they're like, hey, you know what, go through my app, fill out your application, do all of these services, and then, I'm going to work on getting your approval. Borrower does that, and then within an hour or so, they're getting bombarded by all these lenders, and then they're calling their loan officers upset, like, hey, like, what did you do? Why are you selling my information? And it's like, we're not, it's the credit report that you ran.
Yeah, and I'm sure, don't you think, Ronnie, that most lenders already know about this? I mean, this is kind of a common thing, right? That, as soon as you pull the borrower's credit, that they know to expect that the borrower's going to get bombarded with these messages.
Yes, absolutely.
Okay. So again, I mean, these are sort of, downstream, maybe unintended consequences that, people may not realize when they, again, are thinking about this ideal, sort of, point of sale workflow. Um, and then, overall, I mean, is it true? Can we assume that borrowers even want an 8 to 10 minute online loan approval? I mean, what are your thoughts on that, Rania?
I mean, I don't know how many are actually 8 to 10 minutes, especially if you're going through all of the verifications. I think that from my perspective, it makes more sense to break the application or the loan approval into chunks, right? So you have the borrower complete the few fields that you need to make sure the loan is viable, and then you can take them onto various steps as long as they meet certain criteria, right? They input basic information, no verification services, so there's no cost to the lender, right? If you can't do the loan.
Mhm.
And as you go on, there's different criteria that needs to be met for, the credit run. We run credit if everything's good, passes our rule set, then now we offer the asset verification and all of these other things. But it doesn't need to be an 8 to 10 minute loan approval for every borrower.
I mean, Jessica, do you, and this may be an issue, again, like you said, of certain demographics, or even an issue of, the current day time, right? With
Mhm.
comfortableness with technology. But, right now, I mean, how comfortable do you think your borrowers are, even if you could provide them with a true 8 to 10 minute, or maybe 15-minute online approval? I mean, do you think that that's something that borrowers actually want, or is that something that lenders are really trying to push, onto borrowers, to making them think that they want that type of, super streamlined mortgage loan application process?
um, Lynn, I gotta say, one of the things I loved about Steve Jobs was when he invented the iPad. He nobody consumers did not know that they wanted an iPad. Nobody thought that they wanted half phone and half computer until he created it.
Mhm.
So I think right now where we're at with the digital mortgage is lenders are trying to think of things that consumers may want. And when you have one company like a Rocket Mortgage who is providing it, it may not be what borrowers want right now, but we do have to think about how is this industry going to evolve. We don't want to be like companies like, Blockbuster, who got complacent and didn't want to evolve with a change that one company envisioned, and then, over years consumers adapted to, and now that's the preference. So right now, I mean, I did see an article not too long ago, I think from Ellie Mae, that I think more than 50% of last year's millennials who did their online application did say they wanted to have more communication with their mortgage loan officer. But I mean, I know in last year though that millennials were the leading ones who I think it was like over 60% did online applications. They did their process through online applications for their purchase. And so you have to ask yourself, like, if you have that demographic who is online, you know, when they go to refinance their loans in 6 months, a year, 2 years, or whatnot, that's who we have to compete with. They're already used to doing it online. Are they going to do it again? Maybe. We have to look at what is going on in the industry. And before our call, I know I had kind of briefly mentioned to you and Rania that I think that right now it's so new. We don't. The mortgage industry really does not have all the information that we need to really, target these demographics. You know, I've heard some people say millennials want this, or some say Gen X wants these. And I don't think that it is geared towards an actual age group, and we really have to find out like who is doing these things. But on the other hand, we also have to be competitive. Otherwise we're going to get left behind. And so I think we're in this weird, awkward stage where it's a very weird balancing act of trying to determine, okay, this is what is being provided. Do borrowers want this? Okay, they may not want it right now, but how is this industry going to evolve? And are we going to be able to keep up? And even if we are able to keep up, are we going to capture everyone, or are we only going to have like a small amount? And I just think that's where this uncertainty is, and that's why we're running into all these unexpecteds. It's trying to really get a grasp of that. I hope that makes sense. I'm sorry.
No, it does. It does. I mean, basically, you're saying, digital lending is kind of like that awkward teen, right? I mean, we're still trying
Yeah.
to figure out, we're still trying to grow into it. And again, I think that makes sense, right? I mean, we are in this evolution, right? This is something that, it was only it was only in 2016 that Rocket Mortgage really sort of introduced this whole concept of digital lending and digital point of sale. And to think that evolution looks like this, I mean, this is ridiculous. No, I mean, we all know where technology is, but we're talking about is the actual evolution of this system, right? As a digital point of sale specifically, right? I mean, when you think about in the very beginning, right, which isn't too long ago, but initially, what lenders had was just a website with a form, right, where borrowers can go online, fill out the information, and maybe get that information out as a 3.2 file and have it put into the LOS, right? And from there, you're running all your processes, credit and due and whatnot out of your LOS. The evolution then, comes in the next phase is more, hey, we've got this, these digital verification services that can really help accelerate, not only accelerate the process, but obviously with the GSEs and their day one certainty initiatives, they're making the entire sort of rep and warranting and underwriting process a lot more streamlined, right? So we've added that to the mix, but then we started saying, hey, if these are such great tools, instead of us as the lender, running it out of our LOS, why not push that up to the front, right? And have the borrower actually invoke all these types of services. And that way, like you said, Jessica, we can kind of cut out, that work from being having been done by the lender. And then now, I mean, we could go on and on, but this is just an example. Now we've got all these different services, right, that we're trying to push out to the front, right? And notice, I've split sort of this point of sale into two boxes, right? And where that's really becoming interesting and what we're seeing a trend, certainly from our standpoint as a vendor, is that the digital point of sale system has now actually become two systems, right? And what you're seeing is that one half of the system is borrower facing, right? That's obviously that whole, borrower engagement experience, or otherwise known as loan application, right? And then you've got a whole set of tools that are loan officer facing specifically, right? And when you think about, splitting those two up into two separate systems, then you think about, well, what are the objectives, of splitting it up? What are the objectives of these two different tools, right? And I think it's safe to say that, on the borrower facing side, well, look, I mean, you're trying to attract people, consumers, so for the purpose of generating leads, right? Whereas on the loan officer facing side of the system, that's really more about the efficiency of the processing, right? And so, when we have that ability to actually sort of think of the point of sale as two separate parts of a whole, right? And we can focus on one or the other, right? We can now start to see, oh, when we think about the point of sale as a lead generation tool, right? We can talk about the efficiency part of it later, right? But if we just think about it as a lead generation tool, right, then we start thinking about marketing, right? We're really focusing on, well, what's the best way for a lender to generate a lot of leads? So, taking that concept of generating leads, whether it's online or not, I mean, ultimately you're driving borrowers to go online to fill out this loan application. So they got to get there somehow, right? And to your point, Jessica, where you're saying, well, we as lenders need to be better at figuring out, who all these borrowers are, right? It's not appropriate then to really look at borrowers as a single monolithic group, right? You're saying there are certain segments that will have, better adoption, let's say, of, verification assets versus those segments that are not. So explain that a little bit more in terms of how you might start thinking about, the point of sale as a marketing tool, as opposed to some type of time saving or efficiency saving tool. Jessica, what would you say to that?
Um, so I would definitely say that I don't I don't think that we should necessarily look at the point of sale system as a marketing tool. It's more like you said, it's to get the leads, right? And depending on how we get that borrower just to come to either our website or call this call our company or call a loan officer, that should determine what our POS system will do to get the borrower. So let me see. Let me think this through. So let's say we're campaigning, we're doing email campaigns, or the ads, the online ads, or like the Facebook ads, and the borrower clicks on the link and they say, hey, you know what, I'm interested, I want to know maybe what I qualify for. We kind of gotta, I think there should be like certain questions that determine, is this borrower going to be the type that's going to run their credit and these verification services, or do they just want to provide our, a name and number and quick information about themselves so somebody can call them, and then, like I mentioned earlier, when a borrower has spoken to a loan officer, they've started to build that rapport, they are more likely to do those kind of verifications and run their credit and get all those things done. So then at that point, we should have a type of application for them. Our loan officers, or just the company in general, should have multiple types of applications, that are targeted towards a specific, or not a specific, but a general demographic area. So that way we have multiple general demographics and not just this demographic, that demographic.
Yes, I mean, and I think we're saying somewhat the same thing, right? I mean, as you see here, obviously I'm a marketer, right? And so, I have a certain understanding of marketing, and a big part of it is segmentation, right? When you're able to really at least create some sense of, what I'm calling a borrower persona, right? It's a general, sort of categorization of a bar, right? It is somewhat of a stereotype, right? But when you can create and define that specific persona, and those personas can be based on whatever it is, right? It could be profession based, right? You may be creating maybe the police persona or the teacher's persona. It certainly could be region based, right? I mean, if you're a national lender, maybe you have a particular way that you market to people that live in the mountain states versus, people that live in, maybe rural Midwestern states, right? All of these different things can make up a given borrower persona. And, somewhat of the argument could be made that, in order to be able to generate that lead, right? The first step you have to do is you have to attract those types of borrowers and you have to engage with them, right? And while most borrowers, of course, are going to be considering rate as their primary factor in terms of determining which lender they're going to work with, there was a study by PwC that a compelling borrower experience can balance out the influence of rates. So, and we're not saying necessarily that the point of sale is the end all be all in terms of creating that borrower experience. No, and in fact, what we're actually saying is that the point of sale is actually at the end or the bottom of the marketing funnel, right? There are a lot of activities, right, that you as a lender are actually going to perform prior to driving them into the point of sale, right? But we are making the argument, and that could be whatever sort of email campaigns, radio campaigns, print material, whatever it is, right? But you're communicating some message that resonates with that persona, right? And the easiest one that we could talk about is, let's say it's language based, right? Let's say you are targeting Spanish speakers or Chinese speakers or Korean speakers, whatever it is, right? So you would be sending out the entire campaign in that particular language. And if at the end of that sort of marketing funnel, you could put that borrower through a point of sale process that is in their language, right? As opposed to this single point of sale. I mean, they're reading all these, materials that are in Spanish, and then all of a sudden they're taken through a point of sale where everything is in English, right? What we're arguing is that, maybe as being a more sophisticated digital marketer, that's what lenders need to do. And to do that, they could leverage these tools such as a point of sale that can support multiple workflows. Ronnie, do you have any sort of evidence to support that?
Yeah, absolutely. We have, as I said earlier, we have people using different workflows depending on what their relationship is with the borrower, right? So if Ella is working with a borrower and they know that they can do this loan, they'll send the borrower a complete workflow end to end, that may take the borrower, like you said, 8 to 10, maybe 15 minutes with the verifications in there. But then we have companies that just put, a mini workflow on their website or a mini application. They get some information from the borrower, and either they verify manually that they could continue with this application. They'll contact the borrower and get the rest of it completed using the various widgets we have, which basically can segment the workflow out, right, into different stages. Or if they have, the pricing engine integration or something like that, that's running the rules as the borrower completes the different segments of the application. So they do the mini application, and if all is good and they pass all of the rules, then we open up different parts of the application to them so that they can continue with it, right? So I think there's no one size fits all for an application. Everybody's going to want something different. And I think just finding a vendor that can support that is key.
Yeah, I mean, because like Jessica said, you're all as lenders in competition for the same borrower. And so the
Right.
borrower, again, they're making a decision that's based, again, primarily off of rate, right? But again, if you can provide them that better experience, right? Something that really, resonates with them better than the other lender, then there's a higher likelihood of them doing business with you. And so, our argument is that, essentially lenders, should have available to them, some type of ability to create multiple workflows. And by workflows, we are talking about almost, multiple point of sale solutions, right? That behave differently, whether they're slightly differently or entirely differently, right? And therefore, to be very effective at that sort of, targeted digital marketing, if you're going to end up making 2, 4, 10, 15 different types of workflows, you have to factor that in as an evaluation of those types of point of sale solutions you're looking for. One that makes it easier and cost effective for you to actually deploy those multiple workflows. Okay, so I want to move on to sort of our next topic, and I apologize. I realize that the gardener's outside, so I apologize for all the external noise. But the next sort of topic that we do want to talk about is talking about sort of expectations versus reality. I mean, that's something that we as a vendor definitely have sensitivity to. And I know, Jessica, you as a someone that has used multiple point of sale solutions in the past, this is something that is a big consideration, right? We frequently talk to lenders that have very big plans, right? Or maybe not even big plans for the point of sale, but there is some sort of a mismatch, right, between what we as a vendor are telling them that they're going to get and what they actually end up getting, right? And so you can see there are a lot of potential pitfalls in terms of actually delivering. And again, it's a matter of, I guess, to a certain degree, just plain communication, right? What Rania has told me is that vendors don't do the best job explaining what their solution does and what it's going to look like, and lenders tend not to ask enough of questions. I think there's a lot of assumptions of what's going to be delivered on both sides. So, if you guys could talk about that. I mean, Jessica, tell us about, what is sort of the challenge of making sure that you and the vendor are on the same page when it comes to deploying and configuring these solutions.
Yeah. I mean, just an experience with, multiple vendors, not just, lender price. It is communication, it's having that relationship and really working together through the implementation. Um, you know, and then also I think another factor is the vendor's experience plays a big key. We as lenders should, I mean, we vet our vendors, obviously. We reach out to other clients. Some of us, we reach out to clients and we ask, we get feedback, like, what was your experience? What's going on? What have you seen? And I think, to run you or to the point, lenders don't ask enough questions. I think the question's not necessarily to the vendor, but also to other clients. The clients that they're using as their references. Ask like those tough questions, like, realistically, like, how long did it take you? Realistically, did they deliver this, or what challenges did you see? And I think trying to get the product or trying to get past clients as close to the same LOS system, especially when you're dealing with integration, is very important, because that integration piece was one of our biggest hurdles. Was, okay, our vendors can do this, but this is the limitation our LOS system it has. So how do we work around that? And then the other thing is also the expectation of resources. I don't think that lenders, like myself included, didn't, we don't always realize the amount of resources it takes to implement, and not just implement, but to manage technology. We have this fast growing technology and it becomes obsolete almost every other year. We're not, I think we really have to invest in our time, in ourselves, to continue with this changing technology and this changing just world in general. So that way, as our vendors are doing things, we can keep up, but also, to push our vendors to do things like, hey, can you do this? Like, can you look into this? It is a partnership. The vendors need us just as much as we need them to do the product. So I think it's relationship, communication, and a good vet, is important for that implementation, the initial implementation, and then to maintain, and manage that system after it's implemented.
Okay. Yeah. I mean, I think that's true, with any sort of relationship, any sort of vendor. And again, it can be hard to achieve though, right? I mean, we
Right.
may have this idea that, yeah, I mean, it's about relationships. Let's be friendly. Let's be open with communication. But, Ronnie, I think you have a great example with one of our other clients that, look, you can go further than that. You can actually have tangible plans and actions that actually accelerate, the building of that relationship. Can you explain that a little bit, Rania?
Yeah, I'm a strong believer in documentation, right? I think that miscommunications happen way too often with implementations. And when you're working with our sales team and lenders are looking at the demos and they're asking questions, that can't be enough, right? If you're asking if they're, just as an example, we get questions all the time. Well, are you integrated with this specific credit vendor? And we respond, yes, we're integrated, right? But what are you looking for that integration to do, right? It's so important that you document your requirements of any software provider. What do you want their system to do? Do you want to pull the credit score in? Do you want to pull the data in? Do you want us to read the data? There are so many things. There's so many different factors, and just one question alone is just not enough, right? So we constantly run into this situation where the lender has a vision of what they want, and they see our platform and they try to fit their vision into the platform, but they don't necessarily communicate that vision to us, right? Everybody has a different process, and it's so important that the vendors understand the lender's process to make sure that what we're doing fits in with that, right? Or vice versa. You may want to adapt your software vendor's process if you're not happy with what your company's doing. But I just think documentation of requirements is so important and understanding process, right? If the team, if the lender doesn't understand what their internal teams are doing, and then we implement a software that doesn't support that, they either need to adapt to our process or they need to make sure that what we're doing fits in with what they're doing, right?
Yeah, I mean, and that's, to me, it sounds like it's, and because, again, lenders may not even know, right, to ask these questions,
Right.
right? And again, vendors out the same respect, they may not even know what questions, or how to explain a certain feature. So do you think there's an argument, not to say that everyone should do this, but do you think there's an argument that, um, with lenders that are choosing, even well, a vendor, but also maybe an internal project, do you think there's an argument that they implement, their point of sale in sort of in phases, right? They make it somewhat of an incremental approach, and they start with a very simple type of deployment of their point of sale that doesn't have a lot of very hard requirements, such that they can get a fuller understanding of what the system can do, and again, get real world feedback from actual borrowers and loan officers to see whether what they initially intended, right, is even feasible. I mean, tell us about, maybe a client of ours that, took that approach, that said, yes, just give me something simple, I'll work with it, and then I'll iterate from there.
Yeah, absolutely. We had a lot of implementations that started out really large and then they were scaled back, right? Either because, like Jessica was saying, you want the DU integration, but a lot of people don't think through what that really means. Are you going to be able to get all of the information from the borrower that you need to run DU properly? And are you going to be issuing a lot of false positives or a lot of false negatives, right? How is that going to work? And after a while, we decided that we were going to create what we're calling the out of the box solution, right? And the out of the box solution is just basically allowing the borrower to complete the application. And it could be segments of the application or the complete application, whatever you want. Maybe with a credit integration, with some rules in there that, if they have bankruptcy, things like that, then you don't run credit. But it's just a way to get comfortable with us, right? I think that relationship is key, and getting lenders to be comfortable with the vendor is super important before you just go gung ho and do all of these verifications and the complete application and the pre-approval online and disclosures. It's a big change for a lot of companies. And it's a lot of work for the initial implementation on both sides. And I think a lot of lenders, as Jessica said, underestimate the amount of effort that that takes for them to implement. So we've been really encouraging people to start small and then continue to grow it, right? And add different features here and there as we get comfortable with each other.
Yeah, I mean, I think, you know, I want to say that, keep it simple, stupid is the prevailing notion, because that's, that's assuming too much, right? You can't keep it simple, right? I think that's the first thing that lenders have to, and, originators have to understand. It is complicated, right? Even in its most basic form, right? You have to take it as a very serious process. And then, again, I mean, you have to think about, you know, what is most important to you, right? And think about it also in the context of cost as well. So looking at this, saying that, speed of the process is important. We've seen, from certain surveys, in particular this one from Price Waterhouse, that says that realistically, these sophisticated features actually rank lower in importance to borrowers than the actual speed itself. Okay. Um, and then, at the end, like Jessica has said before, right? Borrowers want to talk to a mortgage professional. At some point, whether it's early on or later on, borrowers definitely want to, have someone to talk to help them guide through the process. Okay. Um, and then the other sort of notion is that, again, there are a lot of unexpected things that could occur when someone is going through the process. Okay. You have to make sure that, as a lender, if you're going to sort of rely on this point of sale as a part of your origination process, that, you have support to help borrowers as they're going through the process and they have problems, right? Because nothing's worse than, having consumers be completely frustrated by your process, okay? Um, uh, Jessica, I mean, are you guys still there? I'm not actually hearing you guys, but I want to make sure that we're covering all these concepts appropriately. Rania, do you have anything that you can add to this in terms of yes, keeping this process somewhat simple, but at the same time, making sure that you are investing in those areas that are going to be impactful to even a most basic success.
Yeah, I mean, I think the key to success is just communication and documentation, to be honest. If you document what you want, it's so much easier for people to understand what's in your head. That's the only way to get it out.
Okay.
It's not gonna happen by verbal communication.
Ah, yeah, that is a good point, right? I mean, I think having, too many meetings, right, obviously can be a detriment to the problem, right?
Right.
Making sure that you've got something down that people can reference, right?
Exactly.
That's going to be important as well. And then Jessica, I mean, looking at this list, right, of all these potentially, services that can be integrated to your point of sale. I mean, how much better, is the actual borrower experience with or without these services, right? I mean, are we overcomplicating it and actually end up, frustrating the customer, or are there certain services here that you see that are actually really useful and actually help, make that borrower experience more enjoyable?
From a borrower side, you know, I don't know how much value they see, because you would have to say, okay, borrower, you did an application with this LO this way, and then you did an application with this LO this way. Which one do you prefer? So I just can speak more from our side, from what our loan officers have been seeing, as a benefit. But I think it would be more a benefit, on their end, which are, of course, the LOS integration, and then when they're able to get those, verification, those digital verifications, such as like credit or VOE or VOAs, that it just makes the process faster for the borrower. It could be convenient in not having to ask the borrower, but to say that the borrower has a much better experience, I can't really speak on that unless we ask the borrower, compare these two, which, how likely, I mean, it's probably likely, but how likely are they being groomed by a loan officer and then saying, okay, I went to these two and I filled out a complete application. I spent 20 minutes doing this whole application for both of them, and I prefer this one because this one had a better application process. I,
Hmm.
I don't know how often that's happening.
Right. Right. And I think again, people should recognize that, one of the things that Jessica is really focusing on here is really, looking at the point of sale, and this is just one way of looking at it, right? But looking at the point of sale tool as really an enhancement to the loan officer's actual process, right? In terms of, instead of shunting the borrower through the point of sale as the initial contact, maybe it's really more about getting them to engage with the loan officer first, and then the loan officer puts the borrower through the process. Or maybe it's some sort of hybrid of that, right? I think, Rania mentioned this before, right? There could be sort of a two-stage or a multi-stage sort of process to the way that you configure your point of sale, whereby you're taking information chunks at a time. Some level of pre-screening of borrowers, a very short process where they're entering minimal amount of information, but enough, for example, to determine whether you want to move forward with that borrower with these other more complex parts of the point of sale process, such as ordering these verification services. And at each stage, there is opportunity right? Opportunity either for you to insert that manual process where they're actually talking to a loan officer, or an opportunity to give the borrower that choice, right? Whether they want to continue with an automated process or they want to continue with a process where they're actually engaging with a loan officer. Either way, it's about that opportunity, right? That opportunity to engage and strengthen the sort of relationship between the loan officer and borrower. And at the same time, it also sort of encourages, some amount of saving in terms of costs, right? By not having to run a whole gamut of services, each of which have some fee associated with it, on every single lead that comes through. So, in conclusion, right? I mean, I know we're running out of time. What I wanted to at least get, communicated across is that number one, we're just talking heads here. We're just talking about our own experience. We're not saying that this is the end all be all. I mean, I'm sure there are plenty of people, on this webinar that would completely disagree with what we have to say. So we want to make sure that people understand that we're not trying to, become some sort of guru or savant of digital point of sales. This is just our experience. But what we have seen, right, is that, the point of sale is evolving, right? It continues to evolve. It is right now becoming more of two tools, a marketing tool and an automated loan officer assistant, essentially, right? And which is a great thing, right? And, again, if you can resolve your point of sale into having these objectives and you can look at, them in isolation, look at, one side being, somewhat related more towards marketing and the other side related more towards, efficiency and processing, so on and so forth, then you can sort of focus, right? And you can come up with actual strategies that have an impact, right? In terms of, on this side, we want the strategy to be able to generate, more leads. So we segment, we create marketing personas, we create specific point of sales that align with our overall marketing campaign with the goal of being a better communicator, establishing a stronger relationship with the borrower, okay? And then when we think about the overall application process, yeah, I think there is some truth to that, right? In terms of borrowers in general, they do want a process that's as short as possible, right? Whether they're a Gen Xer or a millennial or a baby boomer, nobody likes to sit there and go through a laborious online process, right? So the shorter, the better. But to what extent do you make it too short that it's not actually helpful, right? And then the other sort of message that we're hearing is that be careful with your integrations. Have a lot of thought into that, right? Think beyond just, yeah, I want to have that. No, I mean, what is the nature of that integration, right? And then investing in an actual support process for your online interactions. If you're committing to an actual digital process, well, you should have a commitment to support for that digital process, because if you don't, that can negate all the benefits, the goodwill that you're trying to encourage with these borrowers by making them, into some sort of, endless frustration loop. Okay. And then the last thing is research show, and I think most of us can agree, when borrowers enter into a mortgage loan process, their expectations are actually pretty low to start with, right? They know that it is going to be a somewhat painful process. They're going to have to put a lot of work, gather documents and have to wait for a lot of things. And that's actually a good thing, right? That gives all lenders a real opportunity to make their customer experience an actual differentiator, right? And whether it's due solely to this digital point of sale or to the way that your actual loan officer communicates or some combination of the two, that should be your goal, right? Make that customer surprised at how enjoyable, I guess, that process is. And last thing, and I just saw this today. Stratmore Group, who most of you should know, I mean, they're a very well-known and respected consulting group. They have a new insight report for August that does speak specifically about digital lending. I would definitely encourage you guys to read what they found out from their surveys. Some of it kind of aligns with what we're saying, some of it does not. But we do encourage you, certainly to go to stratmoregroup.com/insights. And, last thing, here's our contact information. But, I want to thank Jessica and Rania for giving their time in this webinar. But I also want to thank everyone else, right? I want to thank, lender price, obviously we have our own digital point of sale, but I want to thank all the other vendors, right? Be it, Blend or Roostify, Simple Nexus, Maxwell, Pre-App 1003. I mean, I know a lot of you guys, right? And you guys are doing a terrific job, right? This is all part of this evolution of the point of sale process. And I think we're all, in this together to help lenders really engage with their borrowers better. So with that being said, again, thanks, Jessica, Rania. Thank you guys. I really appreciate you guys
Thanks, Lynn.
participating in this. And
Thanks,
if
Lynn.
any of you guys have any questions, feel free to reach out to us. We will be sharing with you the recording of this webinar. And so that's our webinar. Thank you for joining us. Have a great day, everyone. We hope to talk to you soon.